Good morning, everyone, and welcome to Julius Baer's Moving Markets podcast. It's Thursday, the 7th of May, and my name is Helen. Filling us in on the latest in financial markets today, I will speak first of all this morning to Bernadette and Anderko, and my second guest today will be Norbert Rücker, and we'll be talking about energy markets. So that is coming up shortly, but over to you, first of all, Bernadette, for the market news. Good morning.
Good morning, Helen.
News that the US and Iran were talking about a fresh proposal to end the almost 10-week conflict yesterday eased tensions somewhat and helped global equities erase losses which have been caused by the conflict and push them to new highs. We'd already seen this by the end of the Europe session, hadn't we?
Yeah, that's right, Helen. The Pan-European Stock 600 index closed 2.3% higher, and it was similar elsewhere in Europe. FTSE 100 was up 2.2%, bouncing back from Tuesday's heavy losses. The CAC 40 added almost 3%, and the DAX was up 2.2%. All the major sectors, except oil and gas stocks, finished yesterday's session in the green. Some company-specific news. Novo Nordisk raised its annual profit guidance as it revealed its blockbuster weight loss drugs had performed better than expected in the first 3 months of the year. And the Danish jewellery maker Pandora shares finished up about 15% after first quarter sales beat analysts' expectations. And that was despite weak consumer sentiment in the US weighing on results. The company's been under pressure from US import tariffs, as well as the surge in the silver price, which has weighed on margins. But it announced yesterday that it's going to be applying for tariff reimbursement under the International Emergency Economic Powers Act in the US. Coming back to that possible deal you mentioned, Helen, according to Axios, Washington has presented a one-page memorandum of understanding that would gradually reopen the Strait of Hormuz and lift the American blockade on Iranian imports. Detailed negotiations regarding Iran's nuclear program will apparently come later in the process, and nothing has yet been agreed.
Okay, but if we turn to US markets, it's not just a possible deal boosting markets. About 80% of companies in the S&P 500 index have reported better than estimated earnings in the current season. So I guess it's unsurprising that the rally continued there yesterday too.
Indeed, Helen. And another positive factor was lower oil prices. Brent crude trading around $102 a barrel. That helped to reduce inflation concerns. That's boosting the bond markets and also reviving momentum in the artificial intelligence trade. 10-year Treasury yields fell 7.6 basis points to 4.35% yesterday, and 2-year yields fell over 7.5 basis points. And these prospects for lower rates also boosted the appeal of gold, which gained for the third day to trade at around $4,700 an ounce. And the dollar is back where it was at the start of the war. But turning to stocks, the S&P 500 climbed 1.46% yesterday. The Nasdaq Composite was up over 2%. And both indices reached new intraday and closing highs. The Dow Jones closed up 1.24%. We saw a surge in US artificial intelligence-linked stocks. Chipmaker Advanced Micro Devices rose 18.6%, and that was boosted by its latest forecast that the total addressable market for data center computer processing units could reach $120 billion by 2030, which would mean growing more than 35% annually. ARM Holdings was up 13%, and the server maker Supermicro Computer Inc. was up nearly 25%. Stocks did come slightly off their highs after President Donald Trump said the deal is not finalized, and perhaps it's, in his words, a big assumption that Iran would accept the proposal, but markets were certainly rallying on the back of this.
All right, and what's been the story in Asia overnight and this morning?
Well, following on from the Kospi hitting a new all-time high yesterday, that was boosted by Samsung and SK Hynix. It's been Japan's turn to see a tech-fueled rally this morning. So the technology-focused investment giant SoftBank, well, that rallied 13%. SoftBank's gains amplified by its close ties to ARM and the artificial intelligence firm OpenAI. We also saw Advantest and Tokyo Electron rallying nearly 8% and over 9% on AI-driven semiconductor optimism. So the Nikkei surged to a record high after Japan opened again after its extended Golden Week holidays, up almost 6%. The Kospi's up 2% today, and China's indices are also all in the green.
All right, and just finally then, what should we be looking out for in the day ahead, Bernadette?
Well, in Europe, a key event is the UK's local elections. You might ask, why should markets care? But the Labour Party are expected to do very badly in these, and that's raised speculation that we might see a challenge to the Prime Minister, Sir Keir Starmer. Any new Labour leader would face pressure to ease fiscal rules and therefore would have to raise gilt issuance, and that's pushing gilt yields higher. Elsewhere in the US, we're going to get Q1 non-farm productivity, March construction spending, and the New York Fed inflation expectations for April. And just back in Europe, we've got UK and German April construction PMIs, the French March trade balance, and Eurozone March retail sales. And finally, looking at the screens, futures suggest that the positive mood from yesterday is going to transfer into today's trading session. Helen, that's it from me.
Very good. Thank you very much, Bernadette, for the great roundup this morning.
Thank you.
And now on to you, Norbert. Good morning, firstly.
Good morning, Helen.
Now, oil prices were down meaningfully yesterday, briefly dipping below $100. Your thoughts on this, Norbert?
Yeah, there's really the perception that the deal might be eventually coming. But, there's been lots of back and forth and twists and turns, especially over the past days, over the past week. But we are really possibly looking at an inherent underlying shift with regard to talks and negotiation. And there are anecdotes that China, in fact, shows a greater engagement in the conflict. There's also anecdotes that their foreign minister was in Iran, in Tehran, earlier this week. This might be all in the context of this upcoming Trump-Xi meeting. So overall, these developments, and if they're confirmed, could match some of our earlier thinking about possible pathways going forward, that you see broader diplomatic engagement, because this crisis is really in no one's interest. But let's see how things evolve over the coming days.
You often talk about the breathing room in the oil market and that this contains any imminent supply risks. Can you talk about this perhaps in a bit more detail?
Sure. Well, the oil market really moved past this initial shock reaction where there was lots of uncertainty, whereas really things unsettled. This was largely the period of March and then into maybe early April. Now we're in a kind of a different regime where we see how this supply shock and this trade basically impasse around Hormuz is primarily absorbed by the inventory draws. But if you look at how storage is declining, and finally we have the data, from North America, we're also getting now from Asia, so we have more clarity on how this shock is really impacting the oil market. We see that the storage draws are just happening at a slightly slower pace. And that means there's really breathing room for the oil market to absorb the supply shock. Where does this come from? Well, our best guess is that the deficit that is in the oil market, so the gap between how much oil is being consumed and how much oil is being produced and supplied, is slightly lower. So this explains really that you have this lower speed that you're running down your storage. But this storage is quite high, it's elevated. You have lots of strategic storage, which is making into the market. You have lots of commercial storage. So this, and alongside with the trade replugging, the trade rerouting, really should basically prevent any kind of imminent supply risks.
Okay, what are the key things we need to think about then in terms of this temporary resilience?
Well, there's the alternative routes, the export routes of the Middle East. We often talked about that. So the Saudi Arabia's ability to ship by the Red Sea, or the Emirates' ability to directly ship into the Gulf of Oman. But there's really lots of smaller elements that all add up and basically also provide this breathing room. We have the oil boom in South America, and especially there's quite a bounce in exports out of Venezuela. It's small, but nevertheless, overall it matters. You have ample supplies in North America, especially in the product side. So I'm sure that some of the ships loaded with jet fuel, kerosene, are on the way, already made their way to Europe. And you have lots of natural gas liquid supplies. So this is a very specific small market, but it's one that feeds into plastics production. And combined with China's kind of great petrochemical feedstock flexibility, this is really something that helps on the plastic side and the petrochemical side. And then, last but not least, there are substantial government stocks, and namely in Japan. And this has been an element too that really provided some of the fuel supply security in Asia for the time being.
A crisis like this can sometimes bring lasting shifts in the market. Are you seeing anything there, Norbert, in terms of lasting changes we might see?
Yeah, I think it's very important to really look beyond the current geopolitics, and especially if our kind of thesis holds that we're in a kind of a nevertheless temporary but very intense shock. Because I think these shifts, that's what matters ultimately for investors in the long term. And there's some that we think we can spot. So peak oil demand moved closer because road electrification has accelerated. There's ever more evidence for that. It's not only about autos, it's also about trucks. Then the United Arab Emirates, they left the oil cartel, which means in that oil market, and the Emirates are a big producer, there's more flexibility for them. They're less constrained. They continue to ramp up investments, which means this bodes really to our thesis that you're looking at eventually the well-supplied market with greater competition. Then Iraq decided to accelerate building a pipeline that links its southern fields to the Mediterranean. That's a key change. And if you look at that specific project, and if you look at the alternative routes that we have today, maybe some years from now, the Strait of Hormuz is really no longer such a big threat, that the oil market could well survive another potential blockade of Strait of Hormuz if you have such kinds of resilience investment. But to wrap it up, our views aren't changed. We believe that you're in this kind of historic pattern of a short-lived but intense price shock, and we still stick to the view that we likely see some downside, great downside for oil later this year, basically heading into summer or past summer. That's it from the oil market.
Excellent. Thank you, Norbert. Always great to get your latest thoughts.
Thanks for having me.
So that's it for today. Thank you again to Bernadette and Norbert, and to you, our listeners, for tuning in. I hope you enjoyed the show. If you did, then make sure you subscribe if you haven't already. And please join us again tomorrow when I'll be back with more of my colleagues to talk about what is moving markets. Until then, though, have a great day, everyone, and bye for now.
The information and opinions expressed in this podcast constitute marketing material and are not the result of independent financial or investment research. Please refer to www.juliusbaer.com/legal/podcasts for further other important legal information.